Hello, I am Nataraja Upadhyaya. Welcome to yet another special mutual fund performance report. This time it is about the hybrid funds. Hybrid funds are different from equity funds because they attempt to ensure better risk management at the cost of reduced returns. However, hybrid funds come in different types. So let us understand the types of hybrid funds and how they have performed in the market recently. So I'm getting into the presentation right away. So this is the performance report as on June 7th, 2024. That is the last Friday. It took some time for me to prepare this presentation. I would like to start with a disclaimer. This is not a solicitation for mutual fund investment, nor an advice for you to decide your investment. Rather, it is an insight based on the data analysis that comes from value research. Always, mutual fund investments are subjected to market risk. You need to read the prospectus of any mutual fund before investment. The data can have errors either at the source end before it comes to the value research or at the value research in terms of inaccuracy or omissions. And there can be human error in my own processing. I cannot be held responsible for any such things. And all your investment decisions, including mutual funds, should be made by you with the firm commitment of blaming nobody else other than yourself if there is any regret later. Let us get into the hybrid funds. Let's understand different hybrid fund types. There are 7 types of hybrid funds. Let us see what are the differences in them. The first one is aggressive hybrid fund. Aggressive hybrid fund, basically they invest 65 to 80% in equity asset and the remaining, which can be 20 to 35% in the debt asset class. So this is how they try to balance the high returns with the reduced risk, because a good percentage is in the debt instruments, which are considered lesser risk. So the taxation will be at par with the equity funds because there is a significant equity portion here. Balanced advantage fund has much lesser exposure to equity compared to aggressive hybrid fund. Here the percentage of equity can be 50 to 70%. So for taxation, again, it is equal to equity fund. So people go for this for ensuring a fixed income component uh, from their mutual funds. That way, they are insured of whatever fixed income they have depended on, especially because of the 30 to 50% of debt instrument that earns the interest for them. Conservative hybrid fund is definitely more conservative than the balanced hybrid fund because here the equity exposure is only 10 to 25%. So the remaining, which is 75 to 90%, is in debt instruments. So basically, this is a good alternative to debt fund investment because there is a 10 to 25% of equity exposure. So you are very likely to top the fund performance compared to debt fund with the 10 to 25% equity performance. Multi-asset allocation fund. Multi-asset allocation fund is the one which invests in 3 asset classes: equity, debt, and commodity. And there should be minimum of 10% in each asset class. So how much percent goes is decided by the fund manager time to time. Dynamic asset allocation fund is totally different from multi-asset allocation fund. Here, the allocation is completely dynamic between equity and debt. It can be 0 to 100%. Okay. So if you read the mutual fund prospectus, it becomes very clear for each mutual fund. So this is very dynamic and therefore quite volatile also. So why you will go for a dynamic asset fund instead of individually trying to make your allocation between equity and debt? You invest in dynamic asset allocation fund and let the money manager do it for you. That's the reason you go for this. Equity savings fund. In equity savings fund, they will use the derivatives, okay, of equity. So they balance the risk of equity exposure with a derivative to ensure stable return from the equity side. So 65 to 100% can be in equity assets and 0 to 35% in debt asset classes. So equity savings fund will give you lesser return than the aggressive hybrid fund because the derivative investment is to balance the risk of equity. So when the equities go up, there could be a bit of a loss in the derivatives. So it basically ensures better risk coverage for the equity portion if the equities are corrected. Arbitrage fund. See, arbitrage fund strategy is buying in the cash market and simultaneously selling in the futures market. The percentage here again is 65 to 100% in equity assets and 0 to 35% in debt assets. So they are using derivative instruments here. There is a simultaneous buy and sell. So the focus here is to ensure the balance against the equity. Therefore, this fund is its return is much lesser than the earlier type we found, which is equity savings fund. Here, they are focusing on the debt, and equity portion is ironclad further with the derivative instruments. So the overall return will be more like debt funds only. Now let us get into the performance analysis by fund types. Before getting into fund types, let us look at the overall hybrid funds. There are 218 funds. They have overall given last 1 year 21.43%, which is a bit lesser compared to equity funds average, which is around 40%. Now, if you look at the top 1 month leaders, they have given an annual return of 32.06, and top 1 year leaders have given 34.33%. So that shows you that the top 1 month leaders to have some churn out in the leadership because the annual leaders have corrected recently. That is shown in the weekly return also. Weekly, the top 50 monthly leaders gave 2.21% and annual leaders gave 1.94%. But when it comes to 1 month return, they are pretty much close, though top 50 monthly leaders are slightly higher. That means the correction period is over for the equity portion, is what you can do. There are bottom 50 data also here. This is the worst case scenario. If your investment is wrong, what kind of return? It will be more like a debt fund return. Now let us go into different hybrid fund types. As you can see that the most aggressive return comes from aggressive hybrid fund. There are 49 funds there. The next best return has come from hybrid multi-asset allocation, because here it is distributed across equity, debt, and commodity. And off late, if you notice, commodities have done well. So there is slightly an edge on the hybrid multi-asset allocation compared to dynamic asset allocation, right? So 25.38. So the next best comes from hybrid balanced average fund, and the next best comes from hybrid equity savings average, and the next best comes from hybrid conservative average. A conservative hybrid fund for the maximum risk management can give you 13.62, which is far better than a fixed deposit return or a debt fund return. But if you go to hybrid arbitrage average, it is marginally different, higher than a debt fund, but still it is higher by at least 100 basis points, I would say. So this is the scenario. You can see that all hybrid fund types do not have more than 50 funds. So there was no need to make analysis of annual leaders or monthly leaders from a statistics perspective. So this is where you get the picture. So depending on your risk appetite, you can either go for aggressive hybrid fund. The next two are dynamic asset allocation and multi-asset allocation. Next three are balanced fund, equity savings, and conservative. And the least is the hybrid arbitrage average. Now let us get into the top 50 monthly leaders across all the hybrid fund types. Now you can see that I go for consistent above average return across 1 month to 1 year for any fund to be considered investment worthy, more to ensure consistency of performance. So I take the top 50 average and mark anything that is above the top 50 average in each timeline by bold, then whichever have bold in all the timelines will get marked as green. So the investment worthy ones are ICICI Prudential Retirement Fund Hybrid Aggressive Plan, which has given 6.45% monthly and 48.73% annually. JM Aggressive Hybrid Fund, which is the most popular among the hybrid funds, has given you 56.83 annual return. Invesco India Aggressive Hybrid Fund is lower, 36.01, but it is looking up nowadays. ICICI Prudential Child Care Fund Gift Plan, 42.27%. Kotak Multi-Asset Allocation Fund doesn't have annual data, it's a reasonably new one. So these are the investment worthy. Now let us look at the annual top 50. Again, we are looking for consistent performance. So the top annual top leader, Quant Dynamic Asset Allocation Fund, did not make it to investment cut because it has a subdued return for 1 month and 3 years because of the corrections. So quant funds are do very well in the bullish phase, but they suffer in the correction phase. There has been correction, so you can see. So it is right now not investment worthy in the sense that there are better choices. JM Aggressive Hybrid Fund, Quant Multi-Asset Fund has stayed consistent thanks to the commodity exposure, which has done well recently. ICICI Prudential Retirement Fund Hybrid Aggressive Plan, Bank of India Mid and Small Cap Equity Debt Fund, ICICI Prudential Child Care Fund, SBI Magnum Children's Benefit Fund, Invesco India Aggressive Hybrid Fund, Aditya Birla Sun Life Multi-Index Fund of Fund, Mahindra Manulife Aggressive Hybrid Fund. So typically the annual return for chosen one is anywhere between 56.83 at the highest and around 34.65 at the lowest. So that kind of distribution you can expect. One more third technique I use for finding consistent performance is I will look at the average of all the returns, including the 1 week return. That way I accommodate the latest trends also into the average, then sort it out. Then among that consistent average, I consider only those that are above the average of top 50. This way, those which made into the list are JM Aggressive Hybrid Fund, Quant Dynamic Asset Allocation Fund, Quant Multi-Asset Fund, ICICI Prudential Retirement Fund Hybrid Aggressive Plan, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Child Care Fund, SBI Magnum Children's Benefit Investment Plan, Quant Absolute Fund, Invesco India Aggressive Hybrid Fund, UTI Multi-Asset Allocation Fund, Aditya Birla Sun Life Multi-Index Fund of Fund, Mahindra Manulife Aggressive Hybrid Fund, ICICI Prudential Equity and Debt Fund, HDFC Balanced Advantage Fund, Union Retirement Fund, Axis Retirement Savings Fund, Kotak Equity Hybrid Fund. So here you can see that annual return is anywhere between 62.70 to 31.04. So here Quant Dynamic Asset Allocation Fund made it to the list, though it has subdued returns in the recent past because it had superior returns in the other timelines, 6 months to 1 year. So depending on the approach, your selections can slightly vary. This is only to give you different perspectives. You can make the decision based on which of the 3 options you want to consider. I typically go give more priority for those which made into all the 3 lists here. Typically, my hybrid fund investments are based on that analysis across all hybrid fund types, which basically will give more total weightage to aggressive hybrid funds only, because their returns are far more superior compared to other fund types in hybrid. That is because I am more aggressive in terms of my risk appetite. So let us look at the aggressive hybrid fund. Again, here the investment worthy ones are JM Aggressive Hybrid Fund, ICICI Prudential Retirement Fund Hybrid Aggressive Plan, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Child Care Fund Gift Plan, SBI Magnum Children's Benefit Fund Investment Plan, Invesco India Aggressive Hybrid Fund, UTI Aggressive Hybrid Fund, HSBC Aggressive Hybrid Fund, Kotak Equity Hybrid Fund. the annual return is anywhere between 56.83 to 31.04. And all these funds you can see had a bullish return for the last 1 week. Let us look at now multi-asset allocation. Multi-asset allocation funds again have a good return, slightly below the aggressive hybrid funds. The investment worthy ones are HSBC Multi-Asset Allocation Fund, Kotak Multi-Asset Allocation Fund, Quant Multi-Asset Fund, Aditya Birla Sun Life Multi-Index Fund of Fund, Baroda BNP Paribas Multi-Asset Fund, Kotak Multi-Asset Allocator Fund of Fund. Typical returns are 52.04 down to 31.65. There are some funds I have marked in green, though they don't have annual data, but they do have data up to 3 months, so then I will consider. There's one fund I have marked in yellow because it doesn't have data above 1 month. So if you have some insight that it is worthy, it has given you return of 4.14% for the last 1 month, which is higher, higher than the monthly average for the selected ones. Now let us go to dynamic asset allocation funds. Dynamic asset allocation funds are the one where asset allocation can be dynamic, which means that an aggressive fund manager can achieve the highest return here, and that is what has happened. Quant Dynamic Asset Allocation Fund has achieved 62.70%, and investment worthy ones are therefore Quant Dynamic Asset Allocation Fund, HDFC Balanced Advantage Fund, Axis Retirement Savings Fund Dynamic Plan, Franklin India Balanced Advantage Fund, Axis Balanced Advantage Fund, Baroda BNP Paribas Balanced Advantage Fund, Edelweiss Balanced Advantage Fund. So there is a huge distribution with respect to annual return 62.70 all the way down to 25.59. Now, you will see a lot of funds here named as Balanced Advantage Fund, but in the data, they are not marked as balanced fund. They are marked as dynamic asset allocation fund. So there can be always a difference between the terminology and the actual practice used by the mutual fund. So therefore, you need to get into the prospectus of the mutual fund. You will see that most of the popular balanced advantage funds we are aware of are either listed under dynamic asset allocation or under multi-asset allocation. So just be aware of it. So that is about dynamic asset allocation. Now, there are only very few, hardly 6 funds marked as balanced hybrid funds. Here, only one made it to the investment consideration, the 361 balanced hybrid fund. Again, it's a new fund with no 1 year data, but it has done supreme even in looking at the 6 months, so around 25%. So that's annualized. That is pretty good. So the rest have a lot of churn out. See, though that is a balanced hybrid fund, there is a lot of churn out in terms of performance. So this is this balanced hybrid fund probably is not very popular because people are using higher returns of those funds named as balanced advantage fund, but actually appearing in different categories. So be aware of that. Now let us look at equity savings funds. Equity savings funds gave an return, annual return from 23.23 all the way down to 17.47. Investment worthy are HSBC Equity Savings Fund, Invesco India Equity Savings Fund, Sundaram Equity Savings Fund, Kotak Equity Savings Fund, Mirae Asset Equity Savings Fund, Edelweiss Equity Savings Fund. Next, let us go to conservative hybrid. They gave you a return of 18.01 all the way to 14.19. Investment worthy ones are SBI Magnum Children's Benefit Fund Savings Plan, Kotak Debt Hybrid Fund, SBI Retirement Benefit Fund Conservative Hybrid Plan, HSBC Conservative Hybrid Fund, Tata Retirement Savings Fund Conservative Plan, SBI Conservative Hybrid Fund, and UTA Conservative Hybrid Fund. So that is about hybrid conservative funds. Next is the arbitrage funds. They are expected to give the lowest returns. So here the return has been 8.86 all the way to 8.49. Distribution is very little. I'm not going to read out the investment worthy ones, which are in the green. Again, this is more of a slightly, it's a debt fund plus, which is debt fund with some equity exposure, which is very well risk managed through derivatives. So, I doubt anybody will be interested in this among the viewers of this. So, but you have the details. So that comes to the difference of different hybrid funds and their returns. So it will help you how to manage your risk by counting on which kind of hybrid fund. So typically the people who remember the hybrid funds are the either aggressive hybrid fund or multi-asset allocation or dynamic asset allocation or some balanced hybrid funds. And very few people consider conservative hybrid fund. Therefore, along with that, equity savings. So that is a summary. You can expect my monthly report being published on various social network platforms of mine. The blog is available at Nat Fun Corner on Blogger. So see you again next coming weekend. I hope this report has been very useful to you. So wish you all the best with your investments ahead. Thank you.